We're about 22 minutes late, but that's all right because the market hasn't even started moving yet. You got 8 minutes till the algos kick in, and Mark's on top of that. Mark, tell them what's going to happen today.
Why do algos kick in at 8 minutes, man?
Well, at 8:30, usually it starts moving the market a little bit. You'll watch your charts, and your charts start moving on the 1 minute at 8:30, I think. But usually that's what I
Well,
thought was a little algos trading early.
if someone wanted to trade right now through an algorithm, they would be able to.
Okay.
But actually,
there you go. That's a retail myth.
That's a good way to get started. But man, a little bit of chaos over here this morning. Jeez, I go out to my daughter's car. She's got 2 fucking joints right on the passenger seat.
Holy smokes, dude.
So she's driving around in this high power Mercedes, and she's got 2 joints there. And
holy cow!
Then she's supposed to be working at 8:00. She doesn't leave until 8:05.
Mark, you got to fix that. She going to go to co-op? Is this the one going to college? This is the one going to be the nurse, right?
No, it's the other one.
Oh, the one going to Washington.
No, it's the one going to UConn.
Oh.
All right. Anyway, enough of that drama. It's unbelievable, man. And her and my wife were getting these battles. It's like you wouldn't even believe it, dude. You wouldn't even believe it. Anyway, all right. So let's talk about what an algorithm is. Algorithms are really just tools that traders use, and that's it. They're not secret. Just like a plumber uses a wrench, a trader would use an algorithm. So algorithms are just these computerized things that traders use to place orders. Okay. The most simple algorithm would be something along the lines of buy 10% of the volume. So at the end of the day, if 1 million shares traded, you bought 100,000 regardless of the price. It can get more complicated, and you could have an algorithm that's programmed by 10% of the volume, but if the stock comes down by 2%, then by 20% of the volume.
Right.
Or if the stock goes up by 2%, make it just by 5% of the volume. So this is what algorithms are. They're really just tools. Listen, if you put in an order with your broker, it's going into an algorithm. That's just how it is. In the old days, you used to call down to the floor, and they would manually do the trade, and they would call you back. But now everything is done computerized, and these are algorithms. And some algorithms are good, and some algorithms suck, and I will explain why. Algorithms are provided by broker-dealers. So if you trade through the algorithm, you pay a commission, and the broker-dealer gets the commission. So if you're a mutual fund or a hedge fund, you have to trade through a broker-dealer. And the broker-dealers provide algorithms to their clients, who are the hedge funds, the mutual funds, the institutional money managers. Now, here's the thing, and here's why I say some algorithms are good and some algorithms suck. There's about 60 or 70 different trading venues out there, and some of them are interconnected and some of them are not. It's really very choppy, and it's made the market way more volatile than it used to be when there was basically one market, which was the New York Stock Exchange like 30, 40 years ago. So I'll give you a perfect example. I used to get these algorithms that were made by the Bank of New York that really worked well. I would have, when I was a micro cap and a small cap trader, I would have these liquid stocks I needed to trade. So say that I needed to buy 100,000 shares of something, but only 5,000 shares was on the tape. All right. I could put in to my algorithm, buy 100,000 shares at the last price, but only if you can get them, with this limit price, and only if you could buy a minimum of, say, 5,000 shares at a time. If it's just 100 shares, I'm not interested. So I could put that out in my Bank of New York algorithm, and all of a sudden the shares would just start coming in. It's like wham, 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 would just start coming in. I had this other place I got algorithms from, and it's because the guy who owned the firm was friends with someone who was over there. These 2 sleazebags. But this firm, they were called Whedon. They're no longer in existence. They got bought out. I could put out the algorithm, the same exact instructions on their algorithm, and nothing would happen. The order would just sit out there all day. Now, why is the Bank of New York algorithms good and the Whedon ones not so good? Well, the Bank of New York ones are just hooked into way more venues. All right. So if the Whedon algorithm is only hooked into, say, 3 venues, and no one's willing to sell the shares there in those venues, I'm not going to get anything done. If there's someone in a different venue that the Bank of New York covers, then all that wants to sell, then the shares start coming in. So it's a very choppy market now. There's like I said, between like 60 and 70 different venues. So that's really what algorithms are. I mean,
So do the algorithms find the different venues? I mean, is it automatically set in the algorithm for them to go out and search all these different venues, or does it specifically have to fail at one venue to bounce to another, or is it kind of globally and worldwide, or is it specific? Boom, boom, boom.
well, I don't really know because that's all like coding and stuff, but I just know that, like, put it this way, if you are, just say hypothetically, Goldman Sachs, you have your dark pool, right? When people say dark pool, that's another thing that's kind of a myth. All a dark pool is a private stock exchange. If you're a firm that's big enough that you have clients who are buying and selling potentially the same stocks, why would you pay an exchange to the fees that you need to execute the trade? They would just put it on their private exchange, their dark pool, and they would consummate the trade there. Now, back in the early 2000s, it's the same people that provide the algorithms have dark pools. Like all these big firms have these dark pools. They would come around and their pitch was like, all right, listen, you should trade in our dark pool. You should trade in our dark pool. If you trade there, it's dark. No one's going to see it. So that's where the term came from. But it's a complete misnomer because regardless of where something trades, it gets reported to the tape. So they started dark pool as this thing of like, oh, if you trade with us, it'll be in secret. No one will see it. And that, I think, is over the years kind of gives it this like ominous, this ominous kind of whatever, I guess, reputation. Like, oh, it's a dark pool. It's dark, like Darth Vader. It's like, it's dark. But that's pretty much it. So you got all these brokers out there. They got their own dark pools. Some of the algorithms are hooked into some brokers' dark pools and not others. So if you're Goldman Sachs, well, your competition is Morgan Stanley. So maybe you won't let Morgan Stanley have access to your dark pool because you don't want to help Morgan Stanley out, right? If someone goes in with an order of Morgan Stanley and you have a seller in your dark pool and they don't have one, their order is not going to get executed. So maybe they cancel their order there and come over to you. Yep. So, there's some of these firms are in competition with each other. Some of these firms are partners with each other. To be perfectly frank, when you hit that button and you send something out, you don't even really know where it goes. When you get your confirmation statement, you can see where the trades went, and you might buy 1,000 shares of something, and it executes 20 shares on 50 different exchanges. So
I've noticed that too. Like when I'll close an option position, sometimes it won't sell all my options at one time. They'll come in staggered. I'll get the same price that I sold at, but they'll come in staggered at different, they won't be too far apart, but it's, I'm saying there'll be different intervals that they'll come in, as they finish closing out.
Yeah, that's because wherever you put that order, their algorithm is going into the different venues.
Right. Okay.
So that's what that is. So, people say like, oh, the algorithms are taking it up, the algorithms are taking it down. That's just like saying, oh, a carpenter is hammering a nail in with his hammer. It's the people that are controlling the algorithms. The people that are using the algorithms is what it is. It's not like algorithms just kind of are out there thinking on their own for the most part. I mean, I guess in some sophisticated trading places, maybe they just have all the instructions in their algo and so forth. But I think that having all these fragmented markets is not a good thing. All right. Look at it this way. Say you, this is how I explain it to my wife. Say you want to buy a pair of shoes, right? And there's 20 different shoe stores around town. And you go into a store and it's like, all right, these shoes are $20. And you say, okay, I don't feel like going to shopping at the rest of these stores all over town, so I'm going to pay you $20. Well, someone in a different store might be willing to sell those shoes at $19. So you didn't get the best possible price because the stores aren't interconnected. Now, if all those 20 shoe stores merged as one big shoe store, you would have seen, oh, I don't need to pay 20. I can pay 19, right? So it's very similar to the way all these different dark pools and trading venues work. Like I said, some of them are linked in, some of them aren't. Like I've had people say to me before, hey, listen, Mark, I went out to buy the stock at $20 and I saw that it traded at $19.95 and I didn't get anything done. Now, why would someone sell it at $19.95 if I'm willing to pay $20, right? Very logical question. The answer is because wherever that trade went down, the venue that, your broker put it in isn't linked to that other venue. So this increases the volatility of the market. We get, to get a 2 or 3% move. Um, yeah, no problem. Sean, to get a 2 or 3% move these days is really not unusual. Okay.
No,
Back,
no.
back 50, 60 years ago, 3% move was like huge, because now you have all these different venues swinging things around. Whereas it basically 50 years ago, you had the New York Stock Exchange, and that was it pretty much. I mean, you have little regional exchanges like Chicago and Boston, but 99% of the trading went down on the New York. And I personally think we should go back to that system for the reasons that I'm just talking about here.
Well, that's
Is,
what I'm thinking. I mean, you start with a couple of guys underneath that buttonwood tree, and now you've gone to where it's just constantly exploded in the different ways that can be traded. I mean, is there a time that it has to be kind of reined back in to where it's controllable?
once something goes haywire and we get another like flash crash or something like that,
Yeah.
the feds will get involved. But here's the thing: it's the feds, just like we know politicians basically don't know how business works, or at least
Oh,
most
and
of
they're cheaply sold and bought.
them. When they said, all right, we're going to let all these different exchanges operate, okay, we're going to pass the law so a brokerage firm could start an exchange. Well, the idea is like, oh, if there's more competition, that'll help the client, or that'll help Billy Joe Sixpack. You know, like when they went from eighths and sixteenths to decimals in the early 2000s, it was like, oh, you know what? The average Joe isn't smart enough to understand that an eighth is 12 and a half cents. So
Right.
we're gonna go to decimals, and then the spreads just went really thin, and now things traded sometimes for less than a penny of a spread. But that led to, and it evolved, and it led to now we have all these exchanges, and people could get rooked. Like I said, that person wanted to pay $20 for a stock. It traded at 19.95, and they didn't get anything done. If
Right.
all the exchanges were linked together, they would have been able to get their stock. So,
Right. Gotcha.
you
Gotcha.
know,
Yeah, that makes perfect sense.
so it's another example of politicians passing laws because that end up hurting people because they don't really understand what's going on.
Well, when I served, and then when you get elected, man, it's a big responsibility, even if it is in a small community, because you have to make decisions that you can't make decisions that help everybody, but you have to make decisions that hurt the fewest amount of people, but provide the biggest benefit. And that's a hard thing to do, especially when people don't see what you're trying to accomplish. You know what I mean? That's a very hard thing to do.
Yeah, yeah, it's yeah. Well,
But I mean, they can also, but also you also have these people lying. You have people being bought and paid for, and it's just, I don't know, it's just a shameful thing. I don't even know where I was going with on that. I get the politics thing just really has me in an uproar lately. I
dude, I would not be surprised if Biden, Mayorkas, um, Garland, and what's the Secretary of State's name? Blinken. These
blink.
guys have all lied under oath to Congress, so they might all be on their way out. It might take a while, but this would be unprecedented. It
You
already
know,
is unprecedented in our
but
country.
the problem is, Mark, is that people that follow the law and want the law to be done the right way, it takes them 20 years to get something done. These people that commit these crimes that don't follow the law, and we keep making laws to stop the good people from doing things, to stop the bad people from doing the things that they do, it's just a constant circle. And until we figure out a way to fix that, we just, I
Well,
don't,
here's why I think Biden's going down. I mean, he wouldn't get impeached. He would resign. He would just say, "Oh, my doctor said my health isn't good or whatever."
well, he
But
should have never ran.
at first, it's hubris. If, he could have just retired into the sunset, but he
Yeah.
knew he had all this garbage in his background that could come out. Now it's starting to come out, but the guy just doesn't care. He doesn't care about people. I mean, those 13 service people came home and he was checking his watch during the ceremony.
Oh, I saw it. I saw it live. It was disgusting.
If he didn't have his Secret Service with him there, some of those parents probably would have killed him. I mean,
I guarantee they'd have damn sure beat on him a little bit.
but here's how you know this is moving along. At first, it was, I've never talked to my son about his business. Okay. Now then it became, I've never been involved with any of his business. Now it's like, oh, he did all this fucked up stuff when he was a crackhead. All right. So the narrative is changing. So that things are going to shake out. So, Anyway, so that's the story with that. So let's look at the markets this morning. AMD is trading down, and I don't know what news is driving it.
Well, it broke that gap, Mark. It filled the gap yesterday.
Yeah.
And so now it's starting to settle back up. It looks like it's consolidating to that spot.
Well, so now we're trading this morning down around 107. So there's this old saying, right, that gaps refill. And it's true. And this is a perfect example. One of the main reasons why we get support on something is because we have remorseful sellers trying to buy their shares back. So you'll see that over here, right?
Mm-hmm.
Resistance share. People sell, goes down. They think, oh, this is easy. It's great, blah, blah, blah. But then eventually it goes above their price. And a lot of the people who sold tell themselves, I made a mistake. I want to buy my shares back. But I'm only going to do it if I can get them at the same price I sold them at. So they place their buy orders at the level that had been resistance. And if there's enough, resistance converts into support. Now we see this on a lot of pretty much any chart you can see it. Now let's talk about this gap up here. When something gaps, that means it closes at one price and the next day it opens at a very different price and it never traded on these levels. Like, so this particular day, the close was 108.27. On this day, the open was 117.31. So between 108 and 117, there was no trading. So if you don't have any trading, you can't have people who sold who are trying to buy their shares back. So when we reverse and we get back into those price levels, there's just not a lot of buyers around. You don't have those remorseful sellers trying to buy their shares back.
Dude,
So
that's a lot of money that was made in that trade yesterday.
So when people come in to sell, there's not a lot of buyers around. So that forces them to offer their shares out at a discount, and that forces the stock into a downtrend. So when something gaps one way, coming back the other way, they tend to make fast moves back through the gaps. So old saying, that gaps refill, and it's true, and it's based on psychology. And if you understand how when we're looking at a market here, what we're looking at is
That's me. I'm sorry. I've got my wife's cooking in the background. Apologies.
okay. Um, Man, we had some good dinner last night. My wife made
I'll
some.
be in my room here in a couple of days. I'm waiting on my Wi-Fi extenders to get here, and I'll be out of the living room.
Okay, cool. Yeah. So anyway, so gaps refill. If you understand this psychology of how seller's remorse can turn resistance into support, and buyer's remorse can turn support into resistance. Let's see if we got an example of that here. Okay, so this is buyer's remorse here. So people buy here, the price goes up, but then eventually it goes lower. A lot of the people who bought here say, I made a mistake. I want to get out of my shares here, but I don't want to lose any money. So I'm going to hold on to them. And if they get back up to the price I bought them at, I'm going to sell them. So if you have enough remorseful buyers placing sell orders at the level that was support can turn into resistance. So buyer's remorse turns support into resistance. Seller's remorse can turn resistance into support. And this just goes with the concept of there's just not even that it's a concept. It's true that some price levels in the stock market or any financial market are more important than others. And sometimes we know why, sometimes we don't. Like, why is 77 an important level for this particular stock? And it's not 78 or 76. I mean, I don't know. But if you know where these important levels are, it's like your map to the market.
Yeah,
And this helps you
absolutely.
because you know where to put your orders in, right? What would be a good example here? Like say the market's coming down and you say, you know what? I'm going to buy it if it gets down to 75. Well, guess what? You're just guessing it's going to get to 75. If you see that 77 is an important level, you can make the assumption that there's a good chance it gets to 77 and reverses. So instead of me putting my order at 75, I'm going to put it at 77. And in that case, you wouldn't have missed it. So the best traders let the market tell them what to do. They don't guess. They don't come in with these preconceived notions. I know it's not easy to do, but that's just how it works. I mean, now here's NVIDIA, and we can see some of the. As my neighbor is, it's pretty funny. She's got to be like hard of hearing. so she's really loud. She goes out on her back deck, and she gets on the phone, and like if I'm in my back deck, I can hear like everything she says. And our back decks are not close. There's probably a good 50 yards
Right.
between them. But I can hear like everything she says. And then sometimes she'll be back there with her friends, and all you hear sounds like she's talking to herself because you can't hear the other people talking.
Wow.
But she's a very nice lady. Very, very we're lucky we got very nice neighbors on both sides of us here.
That's awesome. I haven't even met mine yet.
Yeah, having bad neighbors could be real, not a good thing. Like we used to have these neighbors, and when we first lived in Greenwich, and this woman was like a real racist asshole. Her name was Sally. My wife used to call her the witch. when my twin daughters were really young, we had like we had help, like they call them doulas. They like help out with the kids. So one of the women was African American. So she comes to the house and whatever, she takes care of the kids and she leaves. So I'm like out in my driveway, and I see Sally, and she comes over. She's like, "Does that woman even speak English?" And I'm like, "How the fuck do I talk to her if she doesn't speak English?"
Are you kidding me?
Yeah,
she
was
terrible.
And what's kind of funny is that her husband was really, really nice. She was the total bitch, and her husband was really nice. And that's where you get this concept of opposites attract, I guess. But
yeah, you see that a lot. You see that either way. You see a guy that treats his woman like that, or a woman that treats her guy like that. I guess it's just what happens. I prefer a partnership myself, where you're all equal and everybody enjoys the time they have together instead of always trying to dominate the other.
Well, my take on that, right? It's when they invented marriage, you only live to be 25. So you had an out.
Right.
All right. Savage asks, could buyer's remorse and seller's remorse work with trading option? Yes, it does, because the options follow the stock. So if options are what we call a derivative, any derivative is a security that derives its value from something else. So if you're trading an option, you should really be looking at the chart of the stock. So if you get to a situation like this, I mean, this is NVIDIA again, we got, support here, right? Turns into resistance because of buyer's remorse. If you see, all right, well, this stock has gotten to resistance and it doesn't look like it's going to get through it, that means there's a really good chance it's going to go lower. That's where you start thinking about what puts you're going to buy. And then that's kind of a personal decision. If you like puts that are in the money, out of the money, how far out is your expiration date going to be? But the stock is the map, that the options are going to follow. So I suppose some people look at charts of options, but I think you're better off looking at the chart of the stock here, because this lets the market tell you what to do. Now, support becomes resistance, as we know, because of buyer's remorse. Now think about this, Savage, right? We get up to resistance, and what is resistance? It's a large group of investors that are looking to sell at or around the same price. In this case, it's around 280 back. So this is last March of 22. Now, when these investors who want to sell are watching the stock move higher, all of a sudden they notice it's not going higher anymore. Now, when something is moving higher, it's because there's not enough supply or sellers to fulfill all of the demand, or buyers or buy orders. So the buyers are forced to pay premiums, and that forces an uptrend. When we get up to a resistance level, all of a sudden there's enough supply or sellers to fill all of the buy orders, so the buyers don't have to pay higher prices anymore. Now, some of these investors who want to sell start to look around and think, oh, gee, this isn't going up anymore. That means there must be other sellers coming into the market. And they start to worry that they're not going to be able to get their order executed, because the buyers are going to go to whoever is willing to sell at the lowest price. So someone might say, all right, well, I'm willing to sell it to 280, 281. Another person might see them and say, you know what, I'm going to, hey, Brandy, another person could say, you know what, I'm going to reduce my order to sell at 280. The next person says, oh, they're selling at 280. I'm going to go to 279, so forth and so forth and so on. And you get this snowball effect. And that's what drives the price down. One of the biggest problems people have is, and it's because the media, and I talk about this all the time, but it's that what am I looking at? Oh, here we go. Is is that if you listen to the media, they put every single little thing, every little movement, it's got to be about some kind of some sort of something's going on with the debt ceiling or politics or this, that. The vast majority of moves are investor psychology. I mean, think about it. What happened on Nvidia between June 30th and yesterday that made the valuation go from 237 or sorry 437 down to 48? That's almost 10%. And
Profit taking.
this is $1 trillion company, so that's a lot of money. Is it, did they have a fire at one of their factories? Was the CEO caught stealing money? No, it's just investor perceptions have changed. Now you can even look here if we want to talk more about the importance of levels. This is an important short-term level. Look at where we're trading this morning, 405.40. Look at where the opening price on this day was, 405.95. Look at where the low trade on this day was, 405.52. Look at the opening trade here, 424.61. So for whatever reason, this is a level that this particular stock likes. And when we got up here, it's the same thing. The sellers notice it's not going any higher. So they deduce that other sellers are coming into the market, and they start to get worried that they're not going to get their shares off. So they start to reduce their prices, and it just spreads. And it's, let's say, it becomes the snowball effect. And that's why this is moving down. I say this a lot, but I think it's really important, which is why I keep saying it. Some of these commentators you see, on CNBC or I don't know, Fox Business News or Bloomberg TV, they are journalists. They don't really know how the markets work. They might think they do, but they don't. So that's how it is. All right. So what is this for NVIDIA in China? An AI battle. So I guess there's some news that might be driving this a little bit, causing people to sell. But the vast majority of moves are just based on psychology. And I don't even really pay attention. I mean, I pay attention now to the news because I teach this class here. But when I was actually trading, it's like you don't really pay attention. It's like whatever, man. Now look at this. We got a level that was resistance, and it became resistance again, and then it became resistance again. So there's another saying that is true, just like gaps refill, and this is markets have memories. And what they're referring to is that one of these important price levels could retain its importance for a long time. In this case, this is June of 22, and this is December of 22. Now, why would the stock run into resistance at the exact same level as it did back here and here? The answer is it's a different type of buyer's remorse. Well, not that it's a different type, but it's a different dynamic. There are people who bought up here who regret buying when the price goes lower, and they tell themselves, damn, I made a mistake. If I can get out of break even, I'm going to. So they place their sell orders at the level they bought at. So this buyer's remorse makes these resistance levels stay intact for a long time. We talk about market memory. I think, actually, I'm going to show you this CVS chart here. Do you know what CVS stands for?
No.
I think it's customer value stores.
Huh.
Yeah. So taking over the world, man. We got about.
Oh, they're on every street corner. Them and a Walgreens.
Yeah, dude. Well, there's not that many Walgreens here in town, but probably in a 5-mile radius of my house, there's probably 6 or 7 CVSs.
Listen, in Florida, it's every corner has a CVS or a Walgreens on it.
As a matter of fact, I went to CVS this morning to buy some duct tape.
Nice. That's not good duct tape buying it from CVS. Was it quality duct tape?
Yeah, dude. I'm trying to fix my we adopted these 2 new guinea pigs. And
yeah.
So I go to the pet store yesterday, and it's like there's this cage. It's like, oh, easy assembly. I spent like 3 friggin' hours on this thing last night. It's like every time you pop in something here, it pops out over on the other side. So finally, I just said, I'm just going to duct tape this thing together. I don't think my guinea pig will care.
Your guinea pig doesn't care. He's just happy to have a home and some fresh hay.
Yeah, totally, dude. Totally. They're good pets. But anyway, this is a CVS chart going back 8 years here. And look at this, right? So we have resistance up around 111. And here we are 8 years later. And where do we find resistance? At the exact same level. Here we have resistance around 83 for 2.5 years. Here we have support for a year. Here we have resistance around 77 for a year. So, this market memory is an interesting thing. And let me show you on Tesla, because everyone loves Tesla. It's typically the most heavily traded stock. Now, Tesla went into this massive sell-off, right? And again, this is another psychological thing here. How is it that since January, Tesla has gone from 110 to 250? It's more than doubled in value of a company. And, maybe they did some things or whatever, blah, blah, blah. But if you pay attention, guess what? The valuation here is the exact same as it was back in September of 22. So what happened in this 9-month period that caused the valuation to change so much? And the answer is, it's the investor perceptions. But here we have an example of a level that was resistance converting into support. And we know that's because of seller's remorse, right? People sell, they go to buy their shares back. Now, here we are 3 years in the future. And where do we find support? At the same level that was support 3 years ago. Well, 2.5 years ago. Market memory. And we can see here, we got support turns into resistance, support turns into resistance. It's here, this is another kind of a good lesson here. This is what we call the relative strength index, and this is something that measures momentum. Momentum is how far something has moved between, say, time period A and time period B. And when we get above what will be its typical trading range, we call that overbought. And when we get below, we call that oversold. And this is important because overbought conditions will bring sellers into the market, and oversold conditions will bring buyers into the market. So this here is the very end of 2021. This is where the bull market, the 10-year bull market ended, right? I mean, COVID was a terrible thing, but in terms of the stock market, it was really just a blip on the radar screen. The market crashed, but then a month later, it was right back to where it started.
Yep.
So anyway, this is the very end. Okay. And what's going on here? Well, this is the fear of missing out. This is panicked buying. People stay on the sidelines and they watch the shares go higher, and they say, well, if it comes back to this level, I'm going to buy it. Then it goes higher and higher. And finally, they get sick of watching it and they say, you know what? I'm going to just go in there and buy it. I don't care what price I got to pay. And those are usually the people that are pretty much the last to the party. Right. And so you have this panic buying. This became the most overbought that it had been in its history. So that was obviously a perfect time to sell. Like we can see, right? This peak here is right there. Now, fast forward to this over here, people start to panic. They're watching the shares go lower and lower, and the sellers are thinking, oh man, I really got to get out of this. This thing is going to zero. So they just get really aggressive on their selling, and that causes us to be oversold. So we got oversold and we got back to this important level, and it was the perfect time to buy. So overbought and oversold are really another thing that is basically just psychology. When things get oversold, it's because people are freaking out and they get too aggressive selling. And when things are overbought, it's because people are freaking out and they get too aggressive buying. So you got to remember, you got to look through all of these charts through this context of psychology. And unfortunately, there's a lot of technical analysts out there that really suck. They don't understand these principles. And there's even people like in kind of big positions that you might see, on CNBC, not that I watch it, but there's people that do these things like Gann theory and Elliott wave and harmonic charts, and I mean that stuff is all just hocus pocus if you ask me. Gann and Fibonacci. Let's see if there's any of these. The pitch fan. I don't know what the hell that is. Fibonacci wedge. Sounds like something I get at the Italian deli. Hey, I'll have the Fibonacci wedge today.
Shift pitchfork. Imagine that. Shift got him a pitchfork named after him.
Yeah, like look at this, the cipher pattern. This is what we call a harmonic chart. Now, if you could make money off of this thing, you're probably so smart, right? You could predict what the lottery numbers are going to be, and you
What's
wouldn't
the
even need to.
criteria to set that? I mean, do you just like find a point and then lay it down, or is there a specific pattern that you're trying to draw with that?
I have no idea, but I do know that people see what they want to see. And
Yeah, absolutely.
I mean, no one in the institutional world who's rational, I mean, I uses this stuff. I've never seen anyone use it. I mean, I don't know, how the hell can you make? Here's the thing: you can see whatever you want to see in this. So if you're someone who's going to tell me, hey, that's the cipher pattern. Oh, it predicted this. Well, you could just line everything up to make it so, yeah, okay. Hey, like I knew when it got to this
Yeah,
letter
that
here, it
fits
was
in
going to break
perfect.
it. What's that?
Right. He's like, yeah, that fits in perfect. Look at that. I can make that work just fine.
Exactly.
There's money in these indicators, Mark. You probably could make an indicator that doesn't do shit as long as you can sell it right. As long as you can make it look like it's doing something.
Well, I think you know, people want it to be like have an easy way, right? Oh, I'm going to use this great indicator and it's perfect, and so and so made all this money off of it because people just, I don't know. I guess it's just the human desire to believe that every puzzle is solvable. I guess I don't even really know what to say. But I do think it's kind of sad that there are people that push this stuff. There are classes, like go on YouTube. You could probably find all kinds of classes on Elliott wave. You know, so Elliott wave says that we go in these 5 different waves, but you could put. All right, let me just show you how I can make Elliott wave work here. All right, so this is Elliott wave. So supposedly there's 5 things, like 5 trends. So 1, 2, 3, 4. Oh, look at that! I followed the Elliott wave perfectly. Anyway, I just think it's kind of
You can make anything work if you want to make it work. Is basically what you're saying. Is it everybody can see whatever they want to see.
exactly. It's like in the eye of the beholder, but in the institutional world, people don't use that stuff. All right, so let's see what's going on in the different sectors this morning. So we got S&P's trading down a little bit. Not surprising because we had a pretty decent move higher yesterday. And this has got to be because of those AI stocks. There is 11 sectors, and what we can do is SPY is an ETF that follows the S&P 500, and it's run by State Street. So we can go up to the State Street website, and I say up because it's up in Boston, and we could type in SPY and then SSGA for State Street Global Advisors. And this gives you all the facts about the ETF. And if you look at the holdings, you can see here the different sectors and how much they compose of the market. Now, these little sectors down here, real estate, materials, utilities, they don't really move the market because they're so small. But that doesn't mean we can't look at them to find potential trading ideas. Even though energy is only 4.1%, it can be pretty impactful on the rest of the market because everyone needs energy. Consumer staples isn't a very big sector, but sometimes money starts flowing into consumer staples right before the markets go lower. That's your classic flight to safety. People figure, hey, the market's going to go down, so I'm going to buy stocks that are going to go down less than the rest of the market. Like technology is probably going to go down more than consumer staples will. And we got tech. Sometimes it's in the driver's seat. Sometimes it's healthcare. Sometimes it's financials. Right now, I think that financials are in the driver's seat. And let's take a look at that sector. XLF. Yeah, see, we're kind of not really doing anything this morning, but as long as this ETF is below this 3350 level, I don't really see the market making significant moves higher. And like I said, if it stays here long enough, eventually the sellers are going to start to get worried and they're going to start to undercut each other. So that's a financial sector. The technology sector is symbol XLK. And that's probably coming in a little bit this morning because of the AI stock. So yeah, here's another. This is a really good example of our concept of important levels, right? Resistance here, came resistance here. Now, it's really kind of an extraordinary thing, and people don't really think about it. But, if you think that this sector is worth trillions and trillions and trillions of dollars, and yet somehow all the stocks that make up the technology sector all came together and formed resistance at the same level from, so this is December of 21, and this is a couple weeks ago. You don't need to be a market guru to see that we've run into resistance. Why is it at 177 and not 180 or 175? And the answer is, I don't know. For whatever reason, back here, the sellers came out of the woodwork when we got up to around 177, and then the market memory has the resistance right at the same level. And we could see here, we got our support becomes resistance. Remember, that's buyer's remorse. We got resistance becomes support because of seller's remorse. Resistance becomes support. So for whatever reason, these particular levels are important for this ETF. So knowing where these levels are is, well, it's like, I think this is a really good analogy. It's like your map, a map to help you know where to place your orders. And it's like if you drove into a town you'd never been into before and you didn't have a map or a GPS, you'd have a hard time getting around. And I would say if you don't know where those important price levels are for whatever it is that you're trading, you're going to have a hard time being successful. You're welcome. Flo Calla.
That's a good name, by the way.
I hope I'm saying that right. Yeah, we got off to a little bit of a late start this morning because we were having some technical problems, but fortunately, it looks like everything worked out. I don't know what happened, but my extent of technology is just reboot.
Gremlins.
Yeah. It's like this morning, my microphone wasn't working, and it's like I didn't do anything different. I didn't make any changes. It was working yesterday.
That's looking nice.
So here's our healthcare sector. This is the second biggest sector. And as we could see here, the level that was support has become resistance. We looked at the financials. I think that this industrial sector is pretty interesting because this really shows you this whole, wow, that's a pretty big move there.
That is a big move.
So you don't need to be a former hedge fund trader or a market guru. And remember, on Wall Street, market gurus are a dime a dozen. So I was thinking about getting business cards made, and I was going to make my title market guru. But people might think that, like, if they don't know me, they don't realize that I'm being sarcastic.
Yeah, you should just put on there super magic mark.
Super genius, like Wile E. Coyote. Right?
That's it.
You ever see on Family Guy when Wile E. Coyote finally catches the Roadrunner?
No way, dude! He finally caught him.
Yeah, it's on Family Guy. So so Wile E. Coyote, after all these years, finally catches the Roadrunner, and then because of that, he doesn't have a job anymore. So they show him he's like sitting on his couch with like the wife beater on, drinking a beer, just like yelling at his wife and everything. It's pretty damn funny.
Those were some of the best cartoons to grow up on too, and they were so racist and just bullshit. I mean, you had Bugs Bunny running around in a dress, you had Yosemite Sam just running his mouth, and Porky Pig. It was just fantastic cartoons, though. We had a lot simpler society back then, I guess. I don't know.
My friend had a video of all the Bugs Bunnies that were banned, and one of his adversaries was this black dude. And all of those got banned because it portrayed the black guy as being like really addicted to or really into gambling. Like he would be just about to get Bugs Bunny, and Bugs Bunny would pull out a pair of dice and like roll them, and then the guy would go like check and see what the
no way.
Yeah,
that's so wrong.
So that got banned.
But I mean, see, that's the kind of stuff that they did back then. Listen, that's where the whole point of this thing was, back to where you and I were talking that racism was dead in the 90s. Was honestly, I had not even seen anything like that back then. I mean, I've got to find it on YouTube to be able to find anything that shows you stuff that was like that. That's crazy. Yeah. I mean, and now here we are wide open again. It's just sad.
Yeah, it really is. I think if we thought about things like genetics, right, as opposed to like these politically correct classes they teach, like like I tell my kids, I raise them, and I don't think they're racist at all. Um, that we're all evolved from the same group of people. If you go back far enough, like there's less genetic diversity between different races, or like the difference. I remember reading that there's these two tribes in Africa that live across from this big river, and there's more genetic diversity between them than there is between one of them and, say, like a Scandinavian person. I mean, we're talking about really, really minor things here. But if people thought about things like science and genetics, well, what's the best reason to not be racist? Because we've all evolved from the same person.
We're all
We're
human
all
beings.
we're all cousins, but they don't teach that. You know, they don't teach that.
Well, they want to box us up and put us in different things. And when you cut your finger, you bleed just like every other color on the planet does, and every other creed and culture. It's the same blood, and it's just really, I don't know. We all need to act a little bit more human with each other, I think.
Yeah, man. Listen, when we die, we're all going to the same. Well, I don't know about that. Some people are going up, some people are going down. But it's like I said, if we worried more about things like science and genetics, I think the country would be very different. And I mean, I don't know what goes on in other countries, but I just think people are too conscious of, oh, instead of like, oh, I'm a person, you're a person. It's like, oh, I'm a white person. Oh, you're an African American person. But you're people, and genetically speaking, you're like 99.999% similar.
Absolutely,
So
everybody's similar. Yeah, and when you do a damn 23andMe, pretty much everybody's got part of everybody in everybody.
yeah, like it depends how far back. If you go back far enough, everyone came out of Africa. You know, like I,
Yeah,
I laugh because my wife like got that thing done, and it's like, oh, I'm X% this, European, X% that. But scientists think that, and I think this is one of my big interests is actually is genetics, is that they call it the Toba bottleneck. No one really knows what happened, but back about 80,000 years ago, they think Homo sapiens got down to there was only about 3,000 breeding pairs of Homo sapiens. And up until 50 years ago, everyone kind of thought, all right, well, primitive man started and then we all became Homo sapiens. But now they know that
right.
there was at least 5 different types of humanoids. There was, a group of people left Africa and went up to Europe, and they evolved into Neanderthal. A different group of people left Africa at a different time and went over to Indonesia, and they evolved into this humanoid race. I think they call them the Dionysians, which were people that were like 3 or 4 feet tall, but they were humanoids.
Right.
And then there's a couple other, but then at some point, for whatever reason, Homo sapiens ended up dominating, and those other races died out. But Neanderthal was in Europe, and when the next group of Homo sapiens moved up there, whenever it was, 40, 50,000 years ago, they interbred with Neanderthal. So anyone who comes from Europe has Neanderthal DNA in their system. So not a lot, maybe just 1 or 2%. But it's really, I find genetics really fascinating.
It is interesting.
Yeah, that's kind of one of my like favorite things to read about. All right, so that's industrials. We also have our consumer discretionary sector, and okay, we can see here another example of resistance became resistance again, right? So we're pinned right there. So it's not a coincidence that this rally stalled out right up here. This rally stalled out right up here because it was resistance back here. For whatever reason, this price level, 167, is important. We could see here the 156 level is important. What was resistance became support, and what was support became resistance. Now, we know that 156 is important here because it was resistance here. Why did this initial resistance form here? That I just have no idea. But we don't need to know. We just need to know where the levels are. Another kind of important thing, which I don't ever hear anyone talk about other than me, is this whole concept of we get this fast move up and then we get the fast move down, right? What's one of the main reasons why we get support? It's because we have remorseful sellers trying to buy their shares back. When we blast through these levels here, it's the same concept of a gap, and there even are some gaps in here. When we blast through these levels, There's just not a lot of time, or not enough time, for there to be this big, group of sellers who are remorseful, and now there's this vested interest of all these remorseful sellers trying to buy their shares back. So when we get a fast move through various price levels, if we reverse and come back through those price levels coming the other way, we tend to make another fast move. Now, this is something that you can use in your trading. Say you want to buy something because it got to support and it's oversold. Well, something that got there faster, that went into like a free fall and got to support, if it rebounds, it's probably going to rebound much faster than something that kind of slowly got to support. So for whatever reason, this particular ETF likes this level more than it likes these levels. I don't know if like is the right word, but you get what I'm saying.
Absolutely.
All right, so now we have our consumer staples sector. That's XLP.
Yeah.
Consumer staples. Well, let's see what we see here. Yeah, this looks pretty neutral. But again, right, support becomes resistance. The best traders know where these price levels are. I mean, it's really just that simple. The best traders
for a while.
The great traders, and I mean, I've literally, no exaggeration, have worked with some of the greatest traders that there are. When I was at SAC, Steve Cohen, he could be the best trader that's ever lived that people know about. The guy's returns are just friggin' like just ridiculously good. And then you have to factor in the fact that his returns are after his fees. It makes it even more. Now, I was told, I don't know if it's true or not, that he was running a 330, which means he would get 3% of a management fee, whatever money he's managing, and he would keep 30% of whatever the profit was. And even with those enormous, enormous fees, he still vastly outperformed the market. So anyway, I will tell you firsthand that he doesn't have a secret system that he uses. He just understands market psychology, and he understands personal psychology. People who lose money because of their emotions, right? They guess, or they get freaked out, or they get overly excited. Like we saw, something gets really overbought. That's emotions. Oh, I got to buy it. I don't want to miss out. And they end up buying it right at the top. Or something's going lower and lower and lower. It's like, oh, this thing's going to zero. I better just go out there and puke out my shares. And what happens? That's usually like the worst time to sell. Let's see what Brandy has to say here. I'm watching NVIDIA today for a possible reversal based on an overreaction to the China chip war news. Yeah. I don't really know what the news is yet, but I think it's important to.
It's been stretched anyway, hasn't it? NVIDIA, it ran up like hell. Yeah, see?
Yeah, so where are we now?
That's a giant gap. God, I can't wait for that to come back in.
I mean, there's a good chance it's going to. Notice, we have been trending lower. And we looked at AMD. That had refilled its gap. AMD. Yeah, so these are, I mean, these things just got really overextended. I think that we're in a period of where AI is kind of being hyped, and it's, maybe people forget, but 5 or 6 years ago it was a similar thing where all people talked about was like, oh, AI this, AI that, AI this, AI that. And anything that had anything to do with AI would go higher if there was some kind of news that could be interpreted as good. And it was a similar thing with like cryptocurrencies. All right. When cryptos were really hot 5 or 6 years ago, a stock, I think Eastman Kodak said, oh, we're going to look into cryptocurrencies. And the stock went from like $2 to like $10 in one day, and it's like, why? And how many cryptocurrencies that had existed that are now gone? I mean, probably tens of thousands of them. Actually, let's take a look at Bitcoin. It could be one of these things where, like, there's all these cryptos, but then only one or two survive. Just like, you see this in a lot of industries, right? Is like in the car industry, when within like a couple of years of cars being a viable business, there was like, I think in the United States, there was 300 companies that made cars. And then 10 years later, there was the big three, and that was it, right? Because a lot of them went out of business or got bought out. So I don't really understand Bitcoin, and I don't know what's going to happen, but I do understand market principles, and you can see here, right? What was support here became support here, then it became resistance here, then it became resistance again. This is the 32,000 level, give or take. It became resistance again here. Actually, let's call it 31,000, and resistance again recently. So that's our market memory there. This goes back to July of 21. So this is 2 years ago. What was support has now become resistance 2 years later. Double H. Is that Heather?
Yeah.
All right. I used to have this professor in college. He was our, like, there was like a couple week period where I was an astrophysics major because I thought, you would like learn like, oh, that's the name of this constellation. That's the name of this constellation. So the professor, his name was, I forget his name, but he called himself H squared because it was first name was H and the second name was H. And then we get in there and he starts like talking about, how to calculate the weight of a planet. Well, it's like really sophisticated math. And then we had an exam, and I remember him yelling at the class because the average test score I think was a 32. So anyway, that's my little story there.
My kid's going to be in hog heaven. He loves that math stuff, and I don't know how he does. I mean, I can do simple, math in my head, but man, this kid's over here freaking sending rockets to Mars.
Yeah, I'm it's not what I thought it was.
It's a beautiful language.
I was a philosophy major for a while. Then I picked the major that everyone picks at UConn if they can't decide what they want to be, and I picked economics, which is pretty interesting. All right, so that's
Maddie's holding thick on the SHIB. On the Shiba Inu.
On the what? Oh, I got to scroll down there. That class sounds brutal and zero fun. Yeah.
Maddie, that's a lot of SHIB. I think I got 4 million. Tell you what, if that goes up 10 cents, you're sitting fat though.
So that's
I think it's the one. Yeah, it's the one with to the US dollar, maybe.
I mean, it's talking about incomprehensible. It's almost incomprehensible what a small number this is.
Yeah, Brandy's got 500. Damn it, I can't even say that, Brandy. That's 545 million SHIB at a 0.25%. That ever blasts off, Brandy, you better buy St. Simon Island.
Wow. Yeah, who knows, man? Maybe one day something will become of it, but let's look at our all chart. That's all zeros. Like it doesn't even register. I mean, I don't really know what to say about this. I think when something is this low, the normal rules don't apply. But whatever, you put $500 into it, and if
yeah, that's what I did. I can put $300 in it a long time ago.
Yeah, if something ever comes of it, then you're going to be rich.
That's it.
I don't know if
I'll just leave it in there, and then maybe my great grandkid will have it.
It is almost incomprehensible how something could be this low of a price, though.
Yes.
Yeah. I
mean, that's
half a trillion.
Yeah.
Half a trillion outflows. Wow. Shibarium faces uncertainty.
Sure, pure lotto. That's right, Brandy. Pure lotto.
Yeah, well, people win the lotto. All right. Let's see here. I don't want to miss any questions. Yeah. All right. Let's just see if there's any news, and then I got to get going. But I'll be back at 11 for our Benzinga class.
I'm traveling again today.
Okay. Yeah. So I don't know. I think there's a Deadpool bet to be made over here. Who gets to who first? This guy or Putin?
Man, did you hear Tim Scott? I don't know if you followed the Twitter, the tweet that I tweeted the other day. I mean, I only mean if you get on Twitter, Mark, but Tim Scott said something where he was talking about his grandfather, the way he grew up in South Carolina, and how South Carolina is nothing now like it was in 1920s when his grandfather was born in the 60s. and how the America that's being portrayed to the people in the news media and by the left specifically is not the America that we live in. And
Of
it's the
course not.
truth. It's
Of
not.
course.
And people that follow that rhetoric are just really blindly being led. They're like lemmings, I guess, is what I'm trying to say.
When they said they want to have voter ID, okay, I don't think there's a rational person in the country that wouldn't say you need to show your ID to vote. And
Dude,
then
we have to show it in Florida.
then Biden comes out and says this is worse than Jim Crow. This is Jim Eagle. So somehow asking people to show their ID is worse than having segregated bathrooms, having lynchings, having the Ku Klux Klan. That should everyone should be so frigging offended by that comment. So you're telling me Martin Luther King gave his life for nothing? Okay, there's been no
Exactly.
improvement in racial relations over the last 100 years. So it's like that's just a delusional, offensive statement. Jim, it's not it's worse than Jim Crow. Jim Crow is the term for laws that made racism legal, right? Those laws
Right.
have been overturned. They don't exist anymore. There was something called the Civil Rights Movement, and he should be able to remember it because he was there, right? Did he say like help free Nelson Mandela or something like that?
Man, he is such a bag of lies.
Yeah, it's he was on TV a few weeks ago saying how when I was a teenager, I was with my son, or I mean, I was with my father, and there was this male gay couple, and he said, Joey, look at that, that's true love, that's all that matters. And Biden was like, so I had this epiphany that I was a pro gay marriage. It's like, all right, well then why for 50 years when you were a senator did you speak out against it? It's like, dude, it's
Thank you.
just pulling shit out of here. All right, let's take a look at this before I get going here.
All right.
Whether a securities broker and his associates traded on confidential information illegally obtained by Morgan Stanley.
Mm,
Spartan Capital Securities, which I've never heard of. Yeah, these people that inside trade, they get caught because they have what they're call these unusual trades. Like, for example, say you're a person who's never bought an option before in your life. Then all of a sudden you put all your money into these call options, and the next day the company gets taken over. Well,
right.
that's gonna show up as like something ain't right here. People get greedy. And believe it or not, most insider trading is not Wall Street people. It tends to be, like the executive assistant's brother, or someone who somehow hears like something's going to go on, like the executive assistant tells her brother, oh, we're going to have this deal where we're going to buy this company. So that's where most of it comes from. I think probably the coolest insider trading scandal was back in the 80s. These guys posed as copy machine repair people. So they would show up, they would go to like a law firm that does M&A, mergers and acquisitions, and they would just show up and they
Yeah.
would tell the receptionist, oh, I'm here to to tune up the copy machine or whatever. And they would say, oh, sure, go on in. And then the copy machine has a record of like all the documents that were ever copied on there. So they were able to figure out, oh, this company is going to get bought out, that company is going to get bought out. But it
That's
is kind of
brilliant.
brilliant. I mean, obviously insider trading is not a good thing.
Well, whatever. I mean, it's illegal, but the fact that they concocted that is brilliant. It's just beautiful, is what it is.
All right, so anyway,
Brandy's voting for Putin.
I
Well, not voting for him. His money's on Putin. He thinks Prigozhin. Well, I don't even know how to say the guy's name. Prigozhin, I think is how you say it.
so we're gonna have a Deadpool bet. All right, I'll take that bet. I think Putin's gonna get whacked.
Morning, JTI. Yeah, I think that Putin's kind of wearing out his welcome, and the more these oligarchs suffer, the more they're going to start putting it together. And they're losing yachts, they're losing all their goodies. I mean, you can only take so much of having your shit taken from you before you have to get rid of the dude doing it.
Yeah, I just I don't know, man. If you're Putin right now, it's like you're a marked man. So many people probably want him dead, and
Be hard to eat or sleep, that's
and
for sure.
he's lost his whatever the right word would be, like his kind of credibility, for lack of a better term, was
Yeah, his credibility's been
Exactly. Like he was
tarnished.
this badass, this like dude who rides around on horses with no shirt on and goes tiger hunting and black belt in judo and when is it let's see if this is it here. And when they went into Ukraine, remember all our quote unquote experts were like, oh, this is going to be over in a week, and here we are, what, a year and a half later. Who we
Well, they kept telling us that Russia was a strong military. Russia hasn't been strong since before Gorbachev took the wall down. I mean, they have plenty of armaments, but they're old. I mean, we could punch through that two tanks with one round of our depleted uranium Sabo rounds.
Yeah, and the Russian economy is smaller than the state of Texas.
Right. So I mean, it's really like we're picking on them, basically. I mean,
Well, I mean, I don't think we could really understand it, but I know there's been generations of hatred between Ukraine and Russia. Stalin tried to, they call it like I think it's the Holodomor, where Stalin tried to,
oh yeah, he killed. So he starved
yeah,
them
and
to
like 3
death.
million people died of famine.
Yeah.
So, yeah, people from different countries have different mindsets because you grow up around different things. Like, like I remember my father-in-law telling me he's since passed on, but he fought in the Korean War, and in the American soldiers had this hierarchy. You got your generals and your colonels and your majors and your captains, and the privates might not know what the plans are, but the generals do. But in the when they were fighting North Korea, they were fighting a lot of Chinese people, and the Chinese I think still deny it to this day, but a lot of Chinese came in, and because China is a communist country, they didn't really have this hierarchy. So he would say that like whoever they captured would know exactly what all the plans were. If they caught a POW, they would know the plans, whereas the American privates had no idea. They just did what they were told. So
Yeah, I mean, listen, I agree. It is a proxy war. I just don't think we should supply them unlimitedly. I think there should be some auditing going on of the money that's being sent to them. I just think that honestly that we're involved in Ukraine so that we can cover up Biden's corruption. I'm serious.
uh, someone's trying to call. Oh, I just want to make sure my daughter got to work okay. If she's not too stoned driving around out there.
That's crazy. She had joints on her seat,
She's
Mark.
such an
That's
idiot,
wild.
dude. She's such an idiot. If she gets pulled over and the cop sees those, it's like, guess what? She's not going to Yukon. She's not driving that car
Nope.
anymore. But
Nope.
she's I don't even know what to say. As a parent, there's only so much you can do. I mean, you can bring them to bring a horse to water, but you can't make them drink it.
Yeah, that's exactly right. And then honestly, it's not your responsibility to take care of them past the point where they can take care of
Well,
themselves.
I don't think she can. And she got this job that she likes so far over at this church in Greenwich, the Round Hill Church. And Greenwich is like one of the richest towns in the country, and Round Hill is one of the richest parts of Greenwich. So this camp that she's at, dude, it's $10,000 for 6 weeks, and it goes from
Holy
8 in
smokes.
the morning till noon. So that's like some serious money. So I'm like, you better play your cards right, because you're going to be getting some babysitting, gigs out of.
Big time babysitting jobs, man. And she can charge outrageous amounts of money
Absolutely,
too.
man. Absolutely.
As long as she don't caught with them joints. If she gets caught with those joints, she might. Well, some people will probably get her to bring them weed, but I'm playing.
It's scary, man. It's scary. She's driving around in this, Mercedes that go 160 miles an hour, and she's like smoking weed.
That's it, man. That's really scary.
Yeah, it is. So she's going to get home at noon, and I'm going to have a little bit of a talk with her. But I listen, man. I did really stupid things when I was a kid too. I'm surprised I'm still alive.
Mark, you followed the dead around the United States of
Yeah,
America.
but I was a little older then. But when I was a teenager, I mean, gosh, drinking and driving. As a matter of fact, one time I'll end here with a quick story because I got to go on a 9:30 call. But so I just got my driver's license and I was 16, and my aunt gave me her old Mazda 626. So me and my two friends, Scott and Chris, are out drinking and driving around, and there's this dirt parking lot down by the beach in Norwalk where I live. So I go into the dirt parking lot and I start doing donuts. It's like 1 a.m, just doing these freaking donuts. The windshield got like so covered with dirt. I had to get out and pour water on it to wipe it off. So anyway, sure enough, as we're pulling out, you see the blue lights, coming through the smoke. And I was like, oh man. And I remember my friend Scott saying, you're sober, you're sober, you're sober. So anyway, the cop comes up and he's like, what are you doing? And I was like, donuts. And he's like, what's in the cooler? And I was like, vodka and beer. And he's like, all right, let's have it. And he took it out. And I remember his partner was sitting on the hood of his car smoking a cigarette. So the cop dumped all the beer out. He dumped all the vodka out. And he's like, go home and get some sleep, And I
see, that was cool. Cops, we used to have really good cops back in the day. I can't tell you how many times that I got off free. Say, hey, you know what, man? Why don't you just go home? Let me help you out. And nowadays, it's like everybody's got to get arrested. It's sad to watch.
Well, there used to be, hey, have one for the road. It's like, hey, have a drink.
Yeah. Well, that was
have another drink before you leave. But I mean, whatever. People obviously. I mean, in my life, I think I've known about 6 people that have gotten killed because of they were either drunk or they got hit by someone who was drunk. So
yeah, it's a sad.
So it is a bad thing, obviously. But I mean, ever since Uber car, it's like there's really no excuse for drinking and driving, I think. But anyway, I mean, she's my daughter. I love her, but she's a fucking pain in the ass, and I don't know what to do. So
it can be challenging, man. I've been blessed with mine. I've had some pretty good kids.
Well, mine were good up until about 4 years ago. And
well, they're girls, man.
And but now that they're the one who wants to be a nurse is really looking forward to going off to school, and this one supposedly is too. But she's going to mess stuff up, man. She's going to mess stuff up. All right, let me get going, and I will. Thanks everybody. We'll be back tomorrow at 8, and I will see you all then.
Have a wonderful day, guys.
Thanks, everyone.